Evan.
Hi.
Yeah. How are you?
Good. How are you?
Great.
Good.
Oh, my microphone going. Ooh. Did that code work? I figured out what was wrong with it.
It did. Thank you.
Okay, sweet.
I think we're just waiting on Casey, who I'm sure is joining at any second.
Cool. Here comes Casey.
Okay, perfect.
Hi, Casey.
Hi.
I think this is
Awesome.
the group.
Perfect. Sweet. So if Mia, if you want to, since you have that login screen up and running, if you will share your screen.
Yeah.
So we can be looking at the same thing. Awesome. So this part should be pretty straightforward. We just start connecting APIs and things that the business uses to make money, spend money, track money. Yep. If you click install over on the left, there you go.
Casey, we should probably flag this to devs.
Yeah, I'm wondering if we want them to do this.
We have a little bit of like a we don't like just like install things on the site because we've had some issues.
Okay.
Not that we think there's going to be issues, so maybe we do need, or let me just ping this to my.
We can, the important thing to get connected while we're all on the phone, these API, most of these API things, the revenue and ad APIs, we can technically, we can do that later. We're not going to have a fully functional system at the end of this short call, but that's okay. I mean, if it needs to follow a procedure internally, that's perfectly fine.
Let me see if we can get back. Did you just start over? Oh,
Yeah, if you go to app.pentane.com, it shouldn't put you into a death loop.
there we
Cool.
go.
So the thing that is going to be useful to go through today, like that Shopify one, if you go down to that, because it just sort of created a channel but didn't actually connect it. If you go and click that edit button on the right, when we're coming back to do that specific one, yeah, click that and go to Shopify, and it should restart that process.
Got it.
If not, you can deactivate that channel and just do another one. But I'm here to be helpful. So we can do that together if we need to. So after that, these are all, API apps. So if there are additional things that you need to have dev inspect or look at, totally can do that as well.
The other ones, like these ones are fine.
Yeah.
Yeah, because they're not going into the website.
Exactly.
Yeah.
Yep.
So like I can create these really quick. I probably will have to go onto the back end and like accept, but these things are all easy. Amazon TBD launching in the fall.
October. Yeah.
Perfect. Can add that later.
Let me just, for TikTok, I'll go, we're not spending there right now, but I'll go add that after the fact because we have like 2 accounts, so I need to make sure it's the right one.
Okay. Easy.
Pinterest, not doing anything right now. Google Analytics. Should be good.
Make sure you're on the oak, not the Jenny Kane one. Yeah.
And that should be it, I believe.
So from an accounting standpoint, is QuickBooks Online the platform, or are you using something else?
We're using NetSuite for accounting.
Okay. Can we export? I'm sorry, I didn't see that in the notes coming into this, or I would have told you this in advance. Can we export last month's P&L in an Excel format from NetSuite?
We could do that, yeah. April's P&L is not quite ready yet for
Yeah, that's
export,
fine.
but we can do that in the next few days.
Adam, do you maybe want to give Evan, I don't think he was on our last call, just like a little bit of an overview of Pentane, just so he
Totally.
like knows.
Yeah,
what-
let me,
how you-
I'll take over. That's a great idea. I'll take over your screen share if that's okay.
Yeah.
And I'll show you an active system. So you see what we're doing and why we're doing it and how we're doing it. I'll show a window in case I jump around. Okay. This is when all the things are connected. This is what the system will look like. What we are doing right now is going through the onboarding process of getting the data connections into the platform. What Pentane does is it takes and uses math to create an understanding of how the business spends money from an expense standpoint, as well as how the business makes money or needs to make money from a customer acquisition standpoint, which are really two separate things. And it combines all that data into one pot so we can create clarity, like mathematical clarity around specific things that we can go and do to operate, to achieve our profit goals, like very specific profit goals, not just be profitable. So,
Gotcha.
there'll be a lot that comes out of that. One of the key pieces when you get into the system for the first time is and this is completely changeable. You get to change this however you want, but you'll define a net profit goal. Again, whether that's break even, great. We type in 0. In this case, this business is operating at about a 5% net margin. So it'll say aim a little higher. You're currently at a 5.22. So let's say this business wants to increase their net profit to 10%. This then again uses a lot of math to take the financial basis in the company, which is why the P&L stuff is important. And I'll show you exactly what happens to that information. It takes that information and then says, you can achieve that by doing these 4 things. And then we'll use the guidance system to do all those things together. You can either decrease the fixed expenses in the business by $17,000, $18,000. You can test increasing your prices to 4.78%. You can do some conversion optimization, website optimization to increase your conversion rate from 0.79 to 0.82. This is where the Google Analytics stuff is helpful. Or you can increase your ad spend. Again, this is specific to this company and how they spend and make money. Increase your ad spend to $76.7 thousand at a ROAS of 5.65. So in the guidance system, and Mia, this has changed since you saw it. We've added some stuff that just went live in this production environment on Monday, which I'm excited to show you. This basically gives us the ability to take and apply all those metrics, pull all those levers at the same time and see how they impact the business. And what we added in here is the ability to understand how tariffs impact the business and how tariffs impact the need for ad spend and performance and all that stuff. So you set a time frame. It generally defaults at 30, but you can look at that however you want. You set your net margin goal. This pulls from that first page, but you can change it to whatever is, you can mess with it. Technically, it is a lever that you can pull. And so what this says about this business is that from their direct to consumer revenue, in order for them to hit a 10% net profit, they need to achieve $262,000 in sales while spending $0 in advertising. So obviously that's not realistic for most consumer brands. It just sets the baseline of like, what's the minimum amount of revenue with the way the business spends money to achieve this goal? And then as we start adding an ad budget, how does it all change? So this slider here is adding an ad budget. So we see now the relationship between our advertising spend in this time period, in this 30 days, and the needed or minimum return on ad spend to achieve that goal. And as our ad budget goes up, the needed return on ad spend comes down, which is how it works for every company on the planet.
Right.
Obviously, it looks different. Every business looks different, but the outcome is the same. So as we increase ad budget, that ROAS comes down. Another thing, Mia, that we just added in here is historical context. So this is the actual ROAS of the business in the last 30 days. So you can look at it, and have some frame of reference of, what's realistic. This business spent 59,000 in ads in the last 30 days. That's what all these frames of reference are. So you can now, you can set your ad budget based on what you can achieve in ROAS. You can set your ROAS based on, you can play with this any way that you want to play with it, pull the levers how you want. But then you can make changes to the business. So in this case, let's say there's now a 30% tariff. We add that in, obviously it gets harder. So what are the things that we can do to offset that tariff? We can increase ad spend. We can increase pricing. Let's say you want to test increase pricing by 20%. That brings down the needed return. It also tells you how the website conversion rate needs to change based on that price change. So in this case, their conversion rate in the last 30 days was 0.79. It can actually drop to 0.64 as a minimum. So we set that like lower limit guardrail. Anything above 0.64 is net positive to the business. It's adding margin dollars to the business. We can change expenses if you're considering hiring a new person, if you're considering, removing an office. You get to just play with all these things. If 10% is no longer realistic and you want to set that to 7%, great. That just becomes another lever that you can pull. So all of this for planning and projecting, and then you build this dashboard, which is real time, a lot of marketing metrics. We have a bunch more coming in here in the next week or two, probably 2 weeks realistically. Profitability metrics, expense metrics. You get to look at and see the things that are important to you and how you operate the business and track them and see them in real time. You can look at them in tables. You can click through on any of them, click this graph, and it takes you to the graph of that thing, which you can overlay on top of other things. You can add trend lines. Mia, I'm not sure if we talked about contribution margin. Evan, if you're the finance guy, you surely are familiar with that. It is the name of the game. Like we want to see contribution margin dollars growing over time. That means it's working. So being able to track that in real time and plot a trend line over it is really helpful because it gives you the ability to see, if something's going off the rails, see it while it's going off the rails. Or if something is performing exceptionally well, see it while it's performing exceptionally well. So there's a lot. If we're only doing,
Are you able to do that at a product level?
not yet, but we're working on it. I have a company that's using that system that I wrote the math for. Right now it's in an Excel, which once it's in Excel, and it's proven out, it's much easier to create. And with Shopify APIs, we can pull, as long as cost of goods are accurate in that, it'll be a very easy thing to build, but not yet. It's important though, because obviously product levels, and the company that's using it, they have like a $400 bag and they have a $100 coffee tote. So, what they can spend based on their desired profit from that to acquire that customer is wildly different. So clarity around that is really important. And I'm also working with, go ahead.
Are you pulling cost of goods from Shopify?
Not here. Here we're pulling that from the P&L. And if the business is on cash basis, then that's part of the onboarding process is we set the gross margin and then it back calculates out. From a P&L standpoint, what happens is we'll take, I'm just going to show you how to do this so you can self-serve it. I will always be available to help as much or as little as you will let me. You're going to import expenses. That P&L, you can either import it as a file or copy and paste the data from that. And what will happen, is it will take you through an expense questionnaire. And this is literally the P&L. But we're going to go through it. Net suite ones can be a little bit trickier for it to auto recognize just because we don't have a lot of them. Like QuickBooks Online, we have a bazillion of.
Right.
So I'll work through that with you and make sure that it's done correctly. And then once it's done correctly the first time, it carries that forward and will auto recognize everything that you already did.
Perfect.
Yeah, so we literally will just go through it. We'll mark the fixed variable expenses. Advertising we set in its own bucket because it is a variable expense, but it's more helpful and useful to look at it on its own with respect to paid media.
Right.
Then we can add forward-looking assumptions, knowing that, for example, we're now in May when if we're working off March or, when April gets updated, whenever the books are closed on that, we know that May might look a little bit differently than April. If we don't think it will, then fine, no big deal. But if, we're going to look at hiring a new person or again, getting rid of an office, we can add those assumptions in here. So it corrects moving forward until the next P&L is updated.
Yep.
One
That makes sense.
question here is like we have both D2C and wholesale, and so like our COGS will be skewed by like our margin on wholesale is obviously not as good as D2C. Like how do we be able to see those separately? Because our ads are like mostly driving D2C, but then
100%.
wholesale
Yeah.
side of the business is there.
It's built to accommodate that. So part of the onboarding process is that we set up B2B channels. This company operates a wholesale channel. We separately define the gross margin in that channel. We separately define any additional known expenses like sales commissions, different fulfillment expenses, things like that. And then is the business on accrual or cash accounting?
We're on accrual.
Sweet. So it's going to take the cost of goods line item out of the P&L, and it's going to calculate the company-wide gross margin. And then I don't get like too far into the weeds and make this confusing, but as the business does B2B revenue and as the business does D2C revenue, it's able to go in and based on this gross margin number that we've entered in here, it's able to then go in and back calculate out the correct D2C gross margin based on what's in the P&L. Does that make sense? So in the big scheme, like it knows that, it calculates for that, it corrects for that. So you can look
But
at
we
the-
would just have to set up because like we have different margins with all of our different retailers, so we'd have to set up each of those as like its own thing in there.
we would probably do it as a
Like a
blended.
blended. Okay.
Yeah, because it just gets hairy when we get into like, 57 different companies. I mean,
Yeah.
this is my company, Bottle Keeper. We have that exact same problem, which is where this comes from. We were primarily D2C and then we added B2B and we went from 0 to 5,000 stores in 1 year. And it was a nightmare to try to track. So we ended up just looking at it across, taking the average gross margin over a period of time and using that. And you can adjust that. I mean,
Mhm.
in this setting, for this wholesale business, you can create a new breakdown. And if it's one that already exists, you can have like a start date and a stop date, meaning this margin only applies to this 6-month period. And then we want this new margin to apply to this other 6-month period. So you have some flexibility in how that looks. So we're not like making an adjustment. It changes everything looking backwards.
Yeah, got it. Okay.
I went ahead and we talked to our dev team and connected it, but there's a couple of Shopify things showing, so we're gonna have to delete some of them because it wouldn't let me edit them. Like it created new channels.
Oh, cool. I've unshared. Will you reshare? I'll see
Yeah.
what you're looking at.
It's showing like 4.
Yeah, it's okay.
It's gonna be this last one.
At 11:19. Okay. Yeah, there's later on in the process, we'll be able to adjust that. It probably won't let you edit it in the onboarding, but once we're actually in the system, it will let you do that.
Okay, cool.
So the next step in that process would be to upload an Excel or CSV file of a recent P&L.
Okay.
We can do that now. I can work, Evan, with you separately if we want to just go through the process, get the account set up, and then we can do that separately. It's totally up to you.
If you do that separately, that'd be great. I'm like trying to close April books right now.
Yeah, that's easy.
Awesome.
Yeah. Mia, if we reshare your screen, we can complete the onboarding, and that will then give us the ability to add other team members, and Evan and I can come in separately and fix some things. Get the
Perfect.
PLC going.
Okay.
That's great.
So under there where it says, what if I don't have QuickBooks Online? There's if you want to skip the P&L step entirely, click here, click that. Okay, sweet. Company does have B2B revenue. So this is where you can call it whatever you want to call it. It defaults to B2B channel, but if you want to call it wholesale.
It would just be all wholesale accounts.
As a starting point, I think that's probably a cleaner, safer way to look at that.
Okay, does anyone have a preference on name? Wholesale.
Wholesale, yeah.
Yeah, that's pretty typical. And then here, if we know what this is, great. If not, we can put in a placeholder, and Evan, we can correct it when you get clarity.
Yeah, let's put in a placeholder like what, 80%?
Yeah, it's around 80.
Yeah.
Your wholesale gross margin is 80%.
Yeah.
The margins are good
Wow.
in beauty. It's pretty, yeah.
That is exceptional. That is the highest
crazy.
wholesale gross margin I've ever heard of.
Yep.
Well done.
Wait, just we'll have some other things that I feel like won't be as exciting. So
Our net
Right.
margin won't be as
Right.
high, but our gross margin is good. Yeah.
Yep.
Okay, that's good. Okay, yeah, you can put 0 in there. It should let you just go past it, but you might not be able to, and click add channel. Cool. Then finish onboarding. And then we'll go, this will dump us in an account. It's not going to be very exciting because it's not going to have, it'll have a little bit of data, but because it doesn't have expenses in there, it won't be doing any math to correct against.
Yep. That makes sense.
Will you go to app.pentane.com? It might be freaking out because we didn't add a thing.
there's going to be some that we're going to have to. Okay, so this delete connection. This delete connection. Okay. Hopefully these ones work.
I'm going to give you, I'm going to put a link in the comments here to try. Okay, yeah, we'll do that after. Okay, just click continue. And yeah, skip. We already did all of this. Yeah, you can just click no. It's already, you already have one in the system, so it shouldn't have. For accounts, I may need to go and force this to go through, which is totally fine. I'll get everybody on this call with accounts, and I'll send you a Loom, a quick recording after the fact of how I did that, Mia. So you can add, does that work?
Yeah.
Okay. And then Evan, I'll reach out to you separately and we'll find time when you have the books ready, whenever that is, the end of this
Sounds
week,
great.
next week, whatever works for you.
Okay.
And I'll get all that set up and we'll be rocking and rolling.
Love it.
Awesome.
Okay,
This is an
well,
exciting tool.
Cool. Yeah, this is an exciting partnership. We're really excited to see Colin has a bunch of things that he wants to do and stuff with marketing.
Yes.
So we're having a lot of discussions around additional functionality and things to build and do. So
amazing.
Uh,
Thank you so much, Adam.
yep. Thank
Okay.
you all. We'll talk to
Bye.
you. Thanks.
Yeah, we'll talk soon. Thanks.
Bye.